Thank you very much. And today we have three very, very busy gentlemen. I'm very proud to have gotten all three of you on the same panel. Very short session, but we really want to hear from all three of you, your stories in fintech. And we heard from Janet, a decade of fintech, right? So maybe just to the two gentlemen here first, serial entrepreneurs here, my respect to you. But really want to hear from you, your journey, especially in the past 10 years in fintech. And I believe that you are not just on your first, but second venture. So maybe I'll start with Ju first. Could you share with us a bit of your journey?
Sure, Wan Yi, and thank you for the invitation to be here. Hi, everyone. I'm Ju, and I'm actually founder and chief executive of Spark Systems. Spark System builds next-generation high-speed trading platforms for hedge funds and banks. I ended up being a serial entrepreneur and accidental entrepreneur. This is my third company. My first was the Old World Finance derivative arm of GK Gold. They were pure stockbrokers, and I offered a widening range of products: precious metal, base metals, energy, agriculture. That grew into the largest FX trading company in Asia. My second company was MDAC, which was acquired by Ant Financial of Alibaba, and now I'm at Spark. So this is 20 over years of fintech. Sounds very long.
Thank you. How about you, Walter?
Well, hi, everyone. I'm Walter. I'm the founder of Chocolate Finance. My journey in fintech is about 10 years old, so the 10 years it works quite well. I'm an actuary. I used to work for a boring insurance company, which was owned by a boring bank, and I decided that I needed to fintech it all up and make it better. So we built a great insurance company called Singlife. Anybody heard of Singlife? Yeah? That was number one. And one of the things I learned when I was at Singlife was that everybody has got money sitting in a bank account doing nothing. Everybody. You, me, we've all got money in the bank doing nothing. Low interest bearing accounts. And so given that what we were doing at Singlife was to try and help people to digitize their insurance and wealth experiences, we looked to solve that. And now with Chocolate Finance, what we're doing is really just taking a new way of thinking about finance altogether, completely different from the way it's been done in the past, to give people a better return on their cash and instant access to their money at any time. Now that 10 years of time that it's taken to, sorry, let me just say that again. We're giving 3.6% return on your cash. You can open an account anytime. You can download it now from the App Store, and you can sign up in about 30 seconds. So you can do that now, or you can do it later. It's up to you. No, but seriously, on the digitization process of fintech, startups have a very, very tough life in getting things going. It is very, very, very hard to start. But once it gets momentum, it can generate real leadership in each category in which you operate. The digitization of stuff is the absolute future, and every new successful company will be born from a pure tech-based foundation.
Okay, so Shadab, as busy as a founder, almost like a founder or father of our fintech ecosystem. I mean, you've been in this role for the past three to 4 years? 4 years. And you were also in fintech before that. Like, how's your past decade showing our age here?
Well, if I reveal my age, we went to school together, so. Good afternoon, everyone. It's a pleasure to be here. Shadab Taiyabi, President of Singapore FinTech Association. My journey in fintech started slightly earlier, I would say, before the fintech term was coined in a more, I would say, formal term in Singapore. Actually, I do have a story on that. So I think it's 2015 when Ravi Menon mentioned fintech in one of his very legendary speeches he gave at the Singapore Law Academy. That's when the fintech term became like being used by media and all in Singapore. But to a certain extent, the fintech companies were already operating before that also. I mean, you can call Thomson Reuters as fintech also. So in a way, my journey started slightly earlier, but my real foray into the real fintech scene was 10 years also. 2014 is when I joined and Australian company which was focused into personalized financial management and account aggregation. That's where the real fintech story started, where I moved from a corporate big setup company to setting up my own printer in a new co-working space. And that was it had a great view, and I had full access to the window all by myself. That was a good thing about it. But I would say in this hall, I mean, it brings so many memories because the first FinTech Festival that when it was started, 2016, and when we ourselves organized as the Singapore FinTech Association, nobody was expecting it to grow so big and it becoming a movement. So, well, in my own journey, I have been in FinTech companies. I volunteered myself to be elected as the Singapore FinTech Association president in 2021, so coming to almost 4 years in my second term now. And while doing this, I have also switched, careers as well. So, in fact, if you go and look at my LinkedIn, you realize that I do work for a financial institution now. But the reality is, to a certain extent, I see it as a reflection of the growth and the maturity of the ecosystem as well. So if you look at fintech companies, the way they were looked at and the way they talked about earlier, it was a lot to do with disruption. But that narrative changed many, many years ago. And Singapore is one of the clear places where the B2B fintechs have risen a lot more. And I mean, in fact, our own fintech state of play report that we released with PwC earlier, 60% of our companies in Singapore are B2B fintech companies. And the average age of companies is also 5.5 years. And think about it, like for an ecosystem which is less than 10 years old, to have an average age of 5.5 years over a sample size of 150 companies, that says a lot that, the maturity is there, but there is resilience in the whole system as well. So very excited about the journey going forward as well. Next year would be the 10th Singapore FinTech Festival. So I'm sure we'll be having a much, much bigger presentation and involvement from the global community here.
Yes. We'll be talking about this 10 years a lot until the next Singapore FinTech Festival. Yeah. But maybe if I could ask, I think all of us come from different backgrounds, maybe different countries as well. But like just from where you see why Singapore for you? Like maybe, I guess it's your home, but still, why Singapore as a base for all your startups? And we saw from the report, and consistently the report said that Singapore and ASEAN attract more than 50% across the years in terms of funding. So just any thoughts, like why Singapore?
Yes, I think Singapore ticks all the boxes. We have, been a place where money looks for good ideas and where good ideas seek funding. You have very low tax rates. Capital gains to begin with is 0. I think all that falls in place nicely to bring in venture capital. And in terms of technology, in terms of telco infrastructure, we are there. We don't have natural disasters in that sense, earthquakes, tsunamis, etc. It's a perfect setting. And there is rule of law. The intellectual property is protected. So I can't really find any reason why any fintech would seek another destination. It's certainly drawn me here. I think the key is really that our population is small, but it still makes Singapore a good test bed. And any successful idea that survives and shows traction can always expand outwards towards the region. And Southeast Asia, to begin with, is a massive region. We have 600 million people, rivals China in a sense that we are half the population of China. So this is, to me, a wonderful location to start a fintech.
Sounds good. How about you, Walter?
Well, Singapore as a regulated environment is probably the gold standard and recognized as the gold standard for how to operate governance and structure around the financial services sector. When I started Singlife, people said to me, that's why would you do it in Singapore? It's the most difficult, most highly regulated, most stringent environment. Why there? And the answer is very simple, is because if you can demonstrate credibility and capability and success in a Singapore context, you can do it pretty much anywhere. And I think that the value and support that we get from regulator here has been outstanding. I think just this conference is a testament to the support that government puts into this ecosystem to make it possible for guys like us to win.
Sounds good. And also, of course, SFA, right? But like, yeah, from your perspective, why Singapore?
No, I mean, completely agree with what Ju and Walter said as well. I just want to add a couple of points here from an SFA perspective. So if you look at it from three pillars that we support, one being the voice of the Singapore FinTech community, second being us being able to help our companies expand their businesses, and third being helping grow the FinTech talent pool. And additionally, of course, the efficiency in capital raising comes in as well. On the first one, like Walter mentioned, the advocacy group that we have through our subcommittees, the advocacy work that we do, a lot of it is only possible in Singapore because we have a collaborative regulator and we have a very clear set of guidelines from policymakers to engage them with. And they listen and they actually implement. They just don't listen for the sake of listening. So that really is a very important key factor for the trust that is there between regulator, policymakers, employers, as well as new founders who are coming in as well. That if I am going through a rigorous process, there's a reason behind it. And if there is some things that need to be tweaked, if I provide the feedback through SFA, it is going to be listened to and it will be implemented. And there are many examples of that through some of the work that we have done through our payment subcommittee or our Web3 subcommittee, our capital market subcommittee, and so on. The second aspect about mission, about helping grow the business, that is implemented through our mission trips that we do with organizations like Enterprise SG. And that is where an important role comes in, that if a government agency is supporting you with, Ruben, how many offices does Enterprise SG have? 30, 40 plus, right? 40 plus. If you, and I've been told by our newly appointed patron, who's the Minister of State for Trade and Industry and Community Culture and Youth, Mr. Alvin Tan, that feel free to use the Enterprise SG offices in different places for our founders to explore opportunities. So if you have that level of support coming in from the government itself, it speaks a lot about the overall, clarity that the government has to support the fintech growth and new segments altogether. It's not just fintech. I mean, they're supporting fintech quite a lot, which we're very thankful for. And the third aspect is the talent pool aspect. We have a very strong focus towards building the talent pool, which is ready for the emerging technologies and the latest that's happening, right? You look at any of the universities, the one that we went to, Ani, the ones that are NUS and SMU and others as well, all of them have a very clear focus on building and evolving their curriculum based on the emerging tech. And some of us on the SFA community, I'm sure some of you on the stage as well, we sit on the academic boards of these organizations, helping them shape the curriculum, helping them guide them along, what's new, and do not teach something which is 8 years old, which is completely obsolete. That is really a very important factor, and that's also prevalent through the community that we have built as well, the Singapore FinTech Youth Chapter, which essentially focuses on involving the latest, not the latest, but the upcoming grads and the youngsters in the employment space as well. So all these factors play a very important role in keeping Singapore at the top and also continuing to, further innovate as well.
Yeah, and then I think the key message there is if you want to be a fintech in Singapore, you have to be a member of SFA, right?
That's a given. I didn't say it out loud as Walter did.
I'll help you there. But yeah, maybe coming to right now, like I just want to hear from you, because I think both of you have gone through exits. I just want to hear from you, like the fintech industry. Where do you think we are at? Like, do you think we are still at a high-speed growth stage? Still good growth coming because we have new technologies coming on board, for example, AI, quantum, or are we looking into a next phase of consolidation, for example, maturity? Or do you think that it's going to be maybe stagnant for a while? Just trying to pick your brains on that. Yeah. Anyone?
I'll take this. I think that the impact of tech permeating into workflow was the fundamental root of fintech. So everything that was done previously by hand, I think we found ways to bring in technology to make it better and faster. We will see that continue, but you'll see an evolving landscape because as we started in 2015, 2016, it was all new ideas. Today, you have new ideas coming in, but you also have 5.5-year-old companies that are beginning to either succeed if they have identified the right pain points and the right solution. Some will consolidate. So we will see increasing consolidation from the earlier fintechs, but new ideas are coming up as well. On top of that, AI too will behave much like tech, and it will permeate into everything. I'm pretty sure that everything you touch, from call centers, etc., will have an AI component in, if not already, very shortly. I think AI will become something that it will be second nature to all of us, and that will drive probably the second sort of wave of fintech development.
Look, I think slightly differently. I think if you look at that nice curve of fintech funding that you saw on the charts earlier, what I think is going to happen in the next while is you're going to get a lot of dead fintechs in the next 3 to 5 years. I think we've had an over-exuberance over the last 10 years, especially the 2020, 2021, early 2022 time period. If you look at how many payments companies there are, and they're all doing the same thing, how can they all compete effectively with each other? Yes, payment flow has gone up to trillions, but the consolidation or the death of guys is going to come soon. I see there are a lot of payment companies that are not yet scale. And scale is everything, right? So if you can't scale your business super fast, you're going to die. Or you're going to get bought or consolidated or something else. So I think for people that are looking at the history of the last 10 years to think about what's going to happen next, or if I'm a new guy and I want to start my own business, what should I do? Don't do something that everybody else is doing. Yeah, because the competition is high, not only for customers, but the competition is high for capital, for resources, and actually just for diversity, or being different from everybody else. So pick something that is new that no one else has done before. Don't build an AI chatbot. Yeah, everybody's doing that. Find a better use case. I think the world of agency in AI is going to be phenomenal section of growth, and not just around the replacement of individual staff or talent with agents. But the orchestration of how to make agents efficient is going to be a whole new industry, and I think that's where a huge amount of funding is going to go in the next while. I think that funding is not as easy to come by as you think as it was, especially for second stage. Early stage is tough. What we're finding is that the guys that get to the 3 to 5 years, that next level to go from okay, I've just figured it out how to make the business work to actually scaling it super. That funding is also not easy to come by. So I think it's got some tough times ahead, in my view.
Yeah, some hard truth there, but yeah, for sure, that we need to think about being unique, because as you mentioned, I think there are quite a lot of saturation in certain sectors in fintech right now. Yeah, and Shadab.
If I can just add to what Walter said, right? To a certain extent, it's also sort of visible in our membership base as well. I'll be very honest, right? So back in 2021, before, actually 2020, before, right before COVID, we had about 250 plus members. I'm talking about the SFF membership base. And then after COVID, we got up all the way to 900 plus. But now we are stabilizing somewhere around 600 to 700 members. And that's quite reflective of the fact that, and we did an analysis on the size of the company's members as well, especially in the fintech space. Majority of them are scale-ups now instead of startups, more than 50%. So that is actually quite reflective of the kind of trend that Walter is talking about here as well, that the number of companies may probably be going down, but at the same time, maturity might be increased, like average age would be increasing as well. And of course, that's reflective. 21 and 22, as per our report as well, were like really, for the lack of a better word, normal years, right? Because of the lowest interest rates at that time and funding really boomed up. But now it seems to be normalizing at that, and I'm hearing it from a lot of other founders as well, that it's a bit of a challenging environment, but it will go through. We'll go through it. It's a tide. Yeah.
Yeah, so on that note, just wondering whether, could you give a piece of advice? I think Walter has already started, right? Trying to say, don't start something that's already out there. But just from each of you, if you could just kind of wrap up with like one advice that you would give to fintechs out there, be it new or those who are still trying to scale. Within, I mean, there are challenges and headwinds, but what should they be looking out for? Well, I'll start with Ju again. I mean, given you sit beside me.
Okay, that's a tough one. One advice. I actually have seen the development across the eras, right? So the first, it started with tech companies, the Googles, the Microsofts, the Apples, and so on. That moved from pure tech to fintech. It's moved to crypto and blockchain, then AI and big data, and now you have ESG, life science, biotech. So it's moved along. I feel after having seen that even though we seem to get to a point of exhaustion, actually change, which we all know is happening, is actually accelerating. It's, and it's difficult for the mind, the human mind, to think of acceleration. By our natural instinct, we kind of want to know where is the leopard now and where the leopard will be in 3 seconds' time, and that's linear. Exponential growth is difficult to conceptualize, but I think that we will see that. I think we will see changes in the industry in the next 10 years that will rival the last 50 years, right? So that's the definition of accelerated change. So all I would like to say is, if you think that you have a solution in mind, and in your mind you've thought through a few of the plus and minuses, the strengths and weaknesses, and you still feel that this has legs to run on, my advice to you is do it. And boldness is powerful. It's magical, right? So if you can find a pain point that you think needs to be solved and you think you know how to do it, do it.
Wow.
Well, I can give you 4 pieces of advice as a startup guy. Number 1, don't spend any money on anything unless you absolutely have to, right? Money is tough to come by, and it's amazing how fast it goes out the door. And by money, that also means don't hire anybody that you don't absolutely need. Do your own laundry. And you have to do that. Number 2, find an excellent investor who's going to support you all the way through the journey. At Singlife, I was phenomenally lucky to have great investors, and I see Sumito, my life, Kenji here in the audience, has supported me all the way through that journey. Find good investors that you trust and that help you. Yeah. Number 3, it's the boldness one. Drive it like you stole it. Yeah. You only get one chance to make a first impression, so go big or go home. You do everything all out, 179%. You go hard, and die must try. Yeah. Number 4, if you are not happy, do something else, right? Because there's a lot of guys that force themselves down this journey and say, I must do this because it's going to do this, and I promised my this guy and this. If you're not happy, or your family is unhappy, or you're waking up in the morning stressed, and you're you are not enjoying your life. You remember, you only live once, yeah? So if you're not happy today because of what you're doing, do something else. 4 pieces of advice.
So those were really hard pieces of advice, I can tell you, for the founders. So just not to discourage the people who are not just founders, who are looking at joining fintech companies, I want to throw in a few bits as well, especially people who are trying to join B2B fintech companies, right? One of the things that you need to realize is that, and I'm touching on B2B because, like I said earlier, 60% of the Singapore fintech companies are B2B fintech companies. One of the challenges that employees, partners, founders of B2B fintech companies have most of the time is that they're not able to clearly articulate the challenges of the potential client or prospect they're selling to. And that's where the biggest mismatch happens. Whenever you're walking into a meeting, try and put yourself in the shoes of the person you're selling to. Clearly identify the challenges that person has. Because your product can be the best product in the world, and you can have the most flashy marketing slide you have. If you're not able to capture the other person's pain points in your first 5 minutes, you're out of the door in his mind in the first 5 minutes itself. So get that thing very clear in your mind. And trust me, this is coming from a person who has been in the B2B space for more than a decade. You have to literally think through the other person's, the prospect's problems in mind, and then plan your discussion around it. Second thing, which is tying into one of the points that Walter said, do not work with people you don't want to work with. You have to wake up in the morning, not dragging yourself out of the bed. It may happen on a few days in 365 days or 252 working days, but if it happens more than once in a month, then you should probably find another way and move out. So that's a very important point I want to raise to all the future potential people who want to join, given we are at the talent stage.
Awesome.
One more thing just on talent, because there's a lot of thing about people. How do you present yourself to a boss? And people have sometimes come to me and say, well, Walter, what do you look for when you are hiring someone? And I can tell you what I don't look for first, because a lot of people show me things that they think I want to see, but I don't. Number one is, I don't care which university you went to. I don't care at all. I don't care if you went to university. What I care about is energy. I care about the spark in your eye and your ability to understand a problem and solve it. Yeah? Sometimes it means you have to have gone through a couple of organizations to have seen a few things before. And sometimes it means that you're just absolutely hungry to come and work and to work. I find with people that have gone to really prestigious universities think that they have already earned the right to come and work for me because they've gone to a good university. Yeah. Whereas other people who are just school of hard knocks still feel that they need to earn the right to work. And so be bold in what you're doing if you're looking for employment by demonstrating depth of vigor and problem solving, and that's what's going to get you the most fun jobs to do.
Let me add to that. I think on top of what Walter just said, passion is irreplaceable. If you find someone passionate in whatever area, let's say photography, let's say music, you will find that that person climbs the learning curve super fast because this is something they think about day in, day out. They are attracted to it, they are personally interested. And that becomes irreplaceable because what you want is someone who can come up the curve and be at the very edge of where things are in as short a time as possible. And it doesn't matter which university you come from. It doesn't matter. It's this belief that I want to be the best. I really want to know the space. Because only when you know the space, you will know what changes in the space make a difference. I think a big part of leadership and management issues stem from people at the very top who feel that they have a right to be there without really being passionate about the role. And then you have issues where you don't know when you should turn left and when you should turn right because you don't really understand the problem. If you did, you would know what decisions to take.
Okay, thank you. I asked for one advice, but I think we got a lot. So thank you so much. I guess just a very quick summary. I mean, from what I've heard, like be bold, be happy, be clear, and also don't spend too much money. Yeah, that's important. I think we can apply this to anything, not just fintech, right? But with that, can you please give us a round of applause for our esteemed panelists? We're going to use the stage for a while, but like QR code here, please download our report. And if I could invite Janet and Arthur up for a photo op. Sorry, bear with us, we're going to take some photos. Thank you very much.